SABMiller is the world's second biggest brewer by volume, has a market cap of 780 billion rand. Headquartered in London, it has more than 200 beer brands in over 75 countries across 6 continents. The group is also one of the world's largest bottlers of Coca-Cola products. It trades on a price-to-earnings ratio of 30.2 and a dividend yield of 1.5%. Can you argue with this story?
It's a superb story.
Yeah, great story. Look, it's not cheap. There we're going, 30p and a lower...
That's never scared you. Come on, you're a growth investor.
Yeah,
it
and
doesn't
we're
matter how
actually in
expensive
the
the stock is.
We're in it, so we're long it, and so we're going to be automatically hot in it. It's certainly executing well, and people love that South African story.
Yeah.
So Chris, come take centre stage again. I think they've
my
full view of that.
My sense is that this is a lovely contrast against British American tobacco in the sense that it is probably a story that is overcooked in terms of just sheer price. It's a superb company, very well run, it's excellent brands. My concern with its size is that it may well be, and the complexity of the business, it's becoming more and more difficult to run. However, it's achieving the results. So the proof of the pudding is in the eating, but it's just too expensive to actually get in now.
Right,
Okay.
so SABMiller, but is it ever going to get cheap? I mean, since 2009,
Yeah, you could have bought it.
And you haven't had an entry point.
Yeah, it traded at 40 Rand a share, in as late as 2003, 2004. So that's what you would have been paying for them then. Look, I think this is a great opportunity for a company positioned as it is to do that premiumization thing, to coin a rather nasty technical phrase. It's where people consume, in a lot of these countries like Colombia and China, even where they operate and others, whatever beer comes their way, badly bottled, flat half the time, made in a cranky old refinery that has got smoke billowing out of it. An operator like SABMiller moves into these countries, they do the marketing better, they do the production better, they standardize their global procurement on all of that, and the margins are better, and then they upsell people, so they get them to drink Foster's if they're in India. They get them to drink Snow if they're in China, they get them to drink whatever. So I think there's a lot of opportunity here. Yes, there are risk issues around regulation and sin taxes on beer as well, and there's some negative social consequences of overuse of alcohol. But I think the story is strong, and they've got plenty of runway to take this thing high. And I think that's fair enough. So the market price deserves to be at these levels.
Yeah.
You said that it's looking expensive.
I'd be not hot for the moment. Yeah.
Okay, not hot on SAIC. All right, well, that puts an end to that discussion. Hot or not, Paul?
No, I do like it. I think even at these fairly heady levels, I think its earnings are going to be good. We've seen trading updates recently out from SABMiller suggesting that lager volume sales have been up like 7.7% on a global basis. That's great. The US business is a bit soft. I mean, Miller, for some reason in America, people are, as we've discussed many times before, moving away from beer because it's a bit of a working class type sort of niche that it has. But even there, I think they've got opportunities to jazz things up and move things around and take out costs. So I'm happy to give it the hot.